Question 341. A will that is dated, written, and signed in the testator's own handwriting is A. A holographic will. B. Non-binding. C. A parole will. D. Admissible if a majority of the decedent's immediate family agrees. Correct answer is A. A holographic will. A parole will is an oral will. These are generally not valid for the transfer of real property and have very limited applicability to personal property in specific circumstances. The admissibility of a valid will, including a holographic will, to probate depends on meeting legal requirements, not on the agreement of the decedent's family members. While family consent can sometimes play a role in settling estate disputes, it doesn't determine the initial validity of a properly executed will. A holographic will is a will that is entirely handwritten by the testator, the person making the will, dated by the testator, and signed by the testator. In California, and many other jurisdictions, holographic wills are recognized as valid even if they are not witnessed, provided they meet specific requirements. Question 342. The following are base and meridian lines in California, except A. Humboldt, B. Mount Shasta, C. Mount Diablo, D. San Bernardino. Correct answer is B. Mount Shasta. The U.S. Public Land Survey System, PLSS, also known as the Rectangular Survey System, is a method for dividing land into grid-shaped townships and sections for sale and settlement. The PLSS was established in 1785 by the Second Continental Congress to survey land ceded to the United States by the Treaty of Paris in 1783. Thomas Jefferson first proposed the system as a way to divide up the original public domain lands. Question 343. Which loans are most similar to each other? A. Interim loan, takeout loan. B. Interim loan, construction loan. C. Construction loan, standby loan. D. None of the above loans are similar. Correct answer is B. Interim loan, construction loan. Interim loans are often used for projects with multiple phases, where funding is disbursed in stages as construction progresses and milestones are met. Construction loans typically cover the entire project cost up front and are paid back with interest over a set term after construction is complete. They share these similarities: used for financing construction, short-term financing, involve progress monitoring or milestones. A takeout loan is a permanent financing option used to repay a shorter-term loan, like a construction loan. They are not directly involved in funding construction itself. A standby loan is a loan commitment that guarantees financing if certain conditions are met. It's not directly used for construction funding but provides a safety net for the borrower. Question 344. Agency relationships, like a listing, may be terminated in all of the following ways, except A. If the property with which the agency is concerned is destroyed. B. Mutual termination agreed upon by both the seller and agent. C. Resignation of the agency by the broker. D. Revocation by the principal if the agent owns an interest in the agency's subject. Correct answer is D. Revocation by the principal if the agent owns an interest in the agency's subject. A. If the property with which the agency is concerned is destroyed, this would terminate the agency by operation of law due to impossibility of performance. The subject matter of the agency, the property sale, no longer exists in its original form. B. Mutual termination agreed upon by both the seller and agent. An agency relationship is based on mutual consent, and therefore, both parties can agree to terminate it at any time. C. Resignation of the agency by the broker. An agent generally has the power to renounce or resign from the agency relationship, although they may be liable for damages if the termination breaches the agency agreement. D. Revocation by the principal if the agent owns an interest in the agency's subject. While a principal generally has the power to revoke an agency, even if it breaches the agreement, potentially leading to liability for damages. This power is limited when the agent has an agency coupled with an interest. An agency coupled with an interest exists when the agent has a property interest in the subject matter of the agency. In such cases, the principal typically cannot unilaterally revoke the agency. For example, if a broker advanced funds to maintain the property and the listing agreement stipulated repayment from the sale proceeds, the broker has an interest, and the seller's ability to revoke might be restricted. Therefore, the principal's ability to revoke the agency is restricted if the agent owns an interest in the subject of the agency. Question 345. An accidental death occurred on a property. 4 years later, is there a requirement for the broker showing the property to a potential buyer to disclose the death? A. Yes. B. Yes, but only if the buyer specifically asks about it. C. No, such disclosure might hurt the chances of making a sale. D. No, it is not a material fact. Correct answer is B. Yes, but only if the buyer specifically asks about it. California law, Civil Code Section 1710.2, relieves sellers and their agents of the proactive duty to disclose a death on a property if it occurred more than 3 years before the buyer's offer. However, this doesn't mean the information can be withheld if the buyer directly inquires about it. In such a case, the agent has a duty to answer truthfully and honestly. Many real estate professionals and brokerage firms, particularly in California, often utilize supplemental disclosure forms that may include questions about deaths on the property, regardless of the time frame. This proactive approach aims to ensure transparency and avoid potential future legal issues, even if not strictly mandated by the 3-year rule unless a direct inquiry is made. Question 346. The concept of the loan-to-value ratio, LTV, describes which of the following? A. Loan value to book value. B. Appraised value to market value. C. Loan value to sale value. D. Loan value to appraised value. Correct answer is D. Loan value to appraised value. The loan-to-value ratio, LTV, is a financial metric used by lenders to assess the risk associated with a loan secured by real estate. The LTV is calculated by dividing the loan amount by the appraised value of the property, expressed as a percentage. It is a key metric used by lenders to assess the risk of a mortgage. Question 347. Mutual mortgage insurance is included in the issuance of which of the following types of loan? A. FHA loan. B. Conventional loan. C. VA loan. D. Jumbo loan. Correct answer is A. FHA loan. Conventional loans, which are not backed by a government agency, may require private mortgage insurance, PMI, if the borrower's down payment is less than 20%. PMI is provided by private insurance companies and has different rules for when it can be cancelled compared to FHA's MIP. VA loans guaranteed by the Department of Veterans Affairs, VA, do not require private mortgage insurance. Instead, most borrowers pay a VA funding fee, which helps to offset the cost of the guarantee program. Jumbo loans are conventional loans that exceed the conforming loan limits set by Fannie Mae and Freddie Mac. They do not have a specific government insurance program like FHA loans and may or may not require PMI depending on the lender and the borrower's qualifications. FHA loans insured by the Federal Housing Administration, FHA, require borrowers to pay mortgage insurance, which is referred to as the Mortgage Insurance Premium, MIP. This MIP includes both an upfront premium and an annual premium. The purpose of this insurance is to protect the lender against losses if the borrower defaults on the loan, making it possible for borrowers with lower down payments and credit scores to qualify for a mortgage. The FHA's insurance fund is known as the Mutual Mortgage Insurance, MMI, Fund. Question 348. the number of feet on each side of a square acre of land would round off to A. 100 feet, B. 204 feet, C. 209 feet, D. 1,000 feet. Correct answer is C. 209 feet. 1 acre contains 43,560 square feet. To find the length of one side of a square acre, you need to find the square root of the area. Square root of 43,560 approximately equals 208.71 feet. Rounding 208.71 feet off to the nearest whole number gives you 209 feet. Question 349. Failing to perform a duty that was promised in a contract amounts to A. Cancellation of the contract, B. Novation of the contract, C. Breach of the contract, D. Rescission of the contract. Correct answer is C. Breach of the contract. Cancellation typically refers to the termination of a contract by one or both parties, often based on specific terms within the contract or by mutual agreement. While a breach can lead to cancellation as a remedy, the failure to perform itself is the breach, not the cancellation. While a breach can lead to cancellation as a remedy, the failure to perform itself is the breach, not the cancellation. Novation involves replacing an existing contract with a new one, or substituting one party for another with the consent of all involved. It doesn't describe the failure to perform an existing obligation. Rescission is the act of setting aside or revoking a contract, effectively treating it as if it never existed. This is usually due to factors like fraud, misrepresentation, or mutual mistake, not simply the failure to perform a promised duty. While a material breach could be grounds for rescission in some circumstances, the initial failure to perform is the breach itself. Breach of contract occurs when one party to a valid contract fails to fulfill their obligations or promises as outlined in the agreement. Failing to perform a promised duty is a direct violation of the contract's terms. Question 350. Joan Simpson and Mary Mass, two single women, plan to take title to a home in such a way that each one will own a half interest with right of survivorship. The granting clause will state: A. Joan Simpson, a single woman, and Mary Mass, a single woman, co-tenants. B. Joan Simpson, a single woman, and Mary Mass, a single woman, each with an undivided one-half interest as tenants in common. C. Joan Simpson, a single woman, and Mary Mass, a single woman, as joint tenants. D. Simpson and Mass, joint proprietors. Correct answer is C. Joan Simpson, a single woman, and Mary Mass, a single woman, as joint tenants. Joint proprietors isn't commonly used in legal contexts for real property ownership. Tenants in common grants each woman a half interest, but it doesn't include the right of survivorship. If one owner dies, their interest would pass according to their will or intestacy laws. Co-tenants is a general term for people who own property together. It doesn't specify the type of ownership, which is crucial in this case. The right of survivorship is a legal principle that allows surviving owners to automatically inherit the deceased owner's share of property or assets. It's primarily associated with joint property ownership, such as joint tenancy and tenancy by the entirety. So, joint tenants is the most accurate and legally recognized way to achieve what Joan and Mary intend. By choosing joint tenants, Joan and Mary ensure that if one of them dies, the ownership of the entire property automatically transfers to the surviving owner. This avoids the need for probate for the deceased owner's interest in the property,